special activity related to our master that is called signal processing and machine learning for big data. And this master is related to machine learning, of course, and signal processing when we have a large amount of data. So we have a set of courses related to statistics, optimization, machine learning, signal processing, and different types of different flavors of machine learning. And we also like always to work in application, particular application. Many times we select those applications that are related to telecommunication. We have a collaboration with Telefónica in order to get information on how clever can be they to develop their infrastructure in South America. But we cover different fields. And we are now very proud to have Eric today because, as most of you know, Eduardo Lopez is an expert in trading systems. So we are going to take advantage of both of them, and in particular of the interest of applying machine learning in this field. So he's going to give you an introduction on how can you apply this into that area. So we have a problem because I know that most of you, or many of you, are very expert in trading, and some of our students don't. So it's inevitably some part that Eric is going to explain would be very easy for some of them, some of you, and perhaps some others, as our students are supposed to be more expert in machine learning. Perhaps some machine learning issues should be very superficial for you, but the objective is both of you put the best of your effort in trying to get the full picture of what Ed is trying to give us. We are really, really grateful to his effort because he's done this job just because of his own interest. So we are very grateful to Eric, and then we are going to start. But before that, and I would like to take you to my start, we have some advertisements. For if you are interested in some activities in the master, we are going, most of you already know, so I'm going to go fast. This Monday, we will have 2 talks on what is a very hot topic in machine learning, which is the use of neural networks, deep learning. And we are going to have 2 conferences from one, which is a data scientist chief of Evo Bank, which is Javier González Domínguez. And we also are going to have another talk from one of our students, which is Ignacio Lopez, that now is working at Google, New York. So this is a good opportunity if you are interested in that field. On Tuesday, we will have a presentation of the master here at the school at 1 o'clock in the morning. And then in May, at the beginning of May, we're going to try again, it's like a challenge for us, just to try to give a very easy introduction to one of the tools that is used for deep learning, which is TensorFlow. Then we will try to give an introduction on both deep learning, theoretical introduction, and also on the tool, TensorFlow. So we will need 9 hours, 3 days for this, and we hope that if you are interested, you can join us. And that's it for today. I sent you an email, so you want to follow. Eric has been very kind to provide you with some scripts. So we have scripts are in Python 3.5. So if you want to follow him, you can download the data, which is a CSV file, and the scripts in GitHub. So you can use this link if you haven't done it yet. And for our students, what we try to do is just to use some platforms where you can share the same scripts. So I think that I haven't received any other emails of any of you interested in this platform. So I understand that our students already know how to get there, and I have uploaded the notebook there, so you can duplicate it, and then you can work by yourself. This is the platform of IBM. IBM, in fact, has 2 platforms. One is commercial, which is this one, and more research-oriented, which is the other platform, but we are using the commercial one. project that is shared by those of you that has sent me an email that you have signed up in the platform and you want to share this. So we have the data and the notebook, so you can work on this notebook. Data is here, you can duplicate it if you want to work on your own machine. The kernel is running, if you open it, and just only remember that you need a kernel that is a Python 3.5 because it's experimental in this platform with Scala. So be sure that you use this kernel when you start it, and that's it. You can try to follow this Python 3.5 experimental Python from IBM. So you can use this script for answering the questions that Eric is going to pose you.
Yes.
Not just to be spectators, but you have to work on the problem. So,
yes.
Thank you.
Okay. Thank you, Luis. Hello, everyone. My name's Eric Martin, and well, like I said in Robotrader's introduction, and like Luis just said before, what we are going to do today is a practical session about machine learning focused on the financial markets, okay? So our goal today is try to extract some rules or some knowledge that allow us to trade or to operate in the financial market with some advantage. And we will use machine learning techniques to try to obtain it. Okay, well, also my idea is to make a completely interactive project, so at any time, if anyone has a doubt or wants to say something, he could interrupt and we will try to solve it or to fix it in real time. Okay, well, also I'll make you some questions and give you some time to try to think about it. And well, that's all. Let's start. And well, how are we gonna structure the project? Well, we will start from the data we have about financial market, that is chart like this. We will try to organize this data and to calculate some more indicators that will help us to predict our target. After that, we will process it with Python, with sklearn's library, and after that we will try to extract that rules that allow us to operate with some advantage. Okay, well, so let's start from the beginning, and I think in a machine learning project always the first part is to know at least a little bit what kind of data we are working with. And how is financial market data? Well, financial market data, it's a continuous function where we represent the price of a trade, for example, $50, and the time that this trade occurs, for example, 5 p.m., 10 p.m., sorry. We could find another point here at 10:15 with a price of 51, for example, okay, and another point here at 11 p.m., for example, a price of 50.5, okay? But why this is different from this? Well, this is because this kind of chart that is called tick chart is pretty insane to try to work with it, because maybe in the opening of SP 500 we could have thousands of new points in just a few minutes, so it's pretty insane, like I said, to try to work with it. Even for a big data project, could be very difficult to make in real time, okay? So what most people used to do is work with candlesticks like this, okay? And what is a candlestick? A candlestick represents a fixed fraction of time that is called time frame. This is a very common term in trading. And well, represents the price variation in this fraction of time. For example, in this we have in this chart, we have 60 minutes candlestick. So each of these bars represents 6 minutes. And how we draw a candlestick? Okay, imagine this candlestick represents the price between 4 p.m. and 5 p.m. Okay, we will have the first price at 4 p.m. that is called open price, represented by a horizontal line on the left. After that, the price starts to move. It makes a high, it makes a low, and at 5 p.m. it closes at close price. Okay, that's the last price of the candlestick, and it occurs at 5 p.m. Okay. So what, Luis? You stole my chair. So okay, well, this is general for. This is common in all kinds of financial instruments, but specifically in this project, we will focus on futures market, more specifically in crude oil market. Why? Well, because futures market has better characteristics to operate in an automatic way than other markets, I think. And well, specifically crude oil, I think it's a pretty famous future to work with it. And well, anyway, we could follow the same project and make it over another different financial instrument, and we could find something interesting too. Okay? Well, for the first part, we will use TradeStation. That's the software you are seeing in the screen. TradeStation is a trading platform, a broker, and a data feeder. But anyway, we could use another ways to obtain our financial market data, okay? So, well, we will use TradeStation because I know it's pretty easy to get this data, and, well, also I'm very used to work with it, so it's very interesting. And what we can do with TradeStation? Well, we could change the financial instrument we are working on. This is the symbol of crude oil. We could change our time frame, and we could select how many years back we want to see. Okay. Well, also another characteristic that makes TradeStation interesting for this part is this data window that TradeStation shows us, and where we have organized all the data we have explained: the time, the price, and the volume. The volume represents the number of trades that we have in a candlestick. Okay, as we are compressing the ticks, it appears a new variable that is the number of contracts traded during this time. Okay. Well, and what's next? The next part is try to calculate some indicators, like I said, that will help us to predict this future. Okay. And what kind of indicators we will use? Well, at this point we could use anything we want. I'm talking about tweets, news, other financial instrument prices, everything, but, well, to keep it simple, I'll use technical indicators, okay? And what is a technical indicator? A technical indicator is an analysis you made over, a mathematical analysis you made over the price of the future in this case, okay? And, well, let me change to TradeStation development environment. This is another window of TradeStation where we program our strategies, our indicators, etc. And, well, I have ready a file here with different technical indicators, some of them very common like average, and some of them more specific from trading, but, well, anyway, it's just variables. Okay, and what I'm going to do now is to apply these this file that I will, apply this file over this chart. We will make like this, but as this file is pretty hard, I have prepared for you. Okay, the new thing we have is these incomprehensible lines in the bottom of the chart, but if we come back to our data window, we see that now we have something more organized and with a lot of variables that they will be our features. And okay, if we export this file to a CSV, we will have a file like I've passed you. I don't know if you have time to see the file I've passed you, but something like this. Okay, so imagine I export. This takes a little time, so I have opened to. And what we have is this. This is the file I've passed you, and here, like I said, we can find our primary data, here in blue. This is the data we extract from the very primary chart. That is our independent variable, we would call it. And after all the features that we have programmed and that we will use to predict our target, okay? But now it's time to define our target, okay? And as we are in financial market, someone could say, okay, our target is earning money, and that's perfect. I completely agree. But the point is how to define mathematically the situations where we can make this money, okay? And this will be the first question for you. How you think we could define our target? I mean, we have all these different events. Each row is an event. This, for example, this one occurs at 1 this day. And I want to know if this event is a 1, I mean, if I should buy at this moment, or if I should stay long in the market at this moment, or if it is a 0 and I should stay flat and don't do anything. Okay, ideas to how to define our target? Perfect. Okay. Continue.
Like you can have like an average of what you have seen until now, for example. I don't know. Or if you want something below the average of what you have seen, and if you see that you are up of that threshold, it's good to sell, and if you are below, it's good to buy.
Okay, it's not very good idea, and we could use the one that we want, but the targets I passed you, the target I defined has 2 factors in consideration, okay? First one, money, obviously, and second one, like he says, time, okay? So we will try to predict if after 3 hours the price money dollars. Okay? Got it? Okay, now the question. How much money and how many times, no? Well, we will come back later over this point, and let me write here to remember. But for now, let me to choose 3 temporal intervals, okay? We will use 5, 10, and 24 hours. And for the price, let me use for now 0.5%, okay? So we will try to predict if the price is 0.5 bigger 3 hours later, okay? Are you following me? Okay, perfect. So, well, if we see this in Excel, we could make like this, for example, for 10 hours. If 10 hours later, we use the close for the people less used to work with trading. The price that is the reference is the close always. If this price is, I don't know if this is good. Okay, see what I'm doing? Sorry, bigger than 0.05, I think it's like this. It's a 1, if not, it's a 0, okay? Yes. Okay, I don't know how to do it. But it's the screen that what zooms. Okay, what I'm making is, imagine we have first event with a close of 50. All these features, another event, and 10 hours later, my price is 53. Okay, what I'm doing is subtracting this from this. Okay, so and normalizing, and if this is bigger than a 0.5%, we have a 1, and else we have a 0. Okay. Okay, well, I'm trying to make it here, but if you couldn't see, it's not quite interesting. So this will be the same column as our 10 hours target. Is our 10 hours target, for example. Okay? Well, we have our file ready. We more or less understand how is the data we are working with. And next step is go on to Python, okay? So we will change to Python, and well, I've passed you 2 files here. Luis more or less introduced you. One is this file that's called probability distribution. This is an auxiliary file. It has some methods and some communication theory method, yes, that will help us in our main file, that is this one that's called template nalva, okay? I don't know how, if you are following in the platform or here, but...
In the platform, everything is in a single notebook. So you have the function at the beginning, and then at the bottom is the main. We don't have main. So at the beginning, at the import of Python, and all the functions that Eric has developed are at the beginning, and just at the bottom, the very bottom, remember that in this platform, as Eric told you, and I asked them, if you want to get some license to get data from TradeStation, well, you can ask them, Eduardo or...
Yes.
Or send an email.
Yeah, my first idea was to give you some more data, because maybe you want to try with it, but I think it's quite more interesting to get one free demo account and try your own in TradeStation. Yeah.
And ask Eric about how to make this pre-processing of
Yes.
So by sending an email, you have some free licenses for.
We have free licenses of Trader Station, and you can try with the data. And
Yeah. Actually, I think this is one Robotrader account. Okay.
So in this platform, we have in IBM platform, we have is just uploaded the CSV file into data storage from IBM, which is the CSV file that is here. And the platform, what they do is just when you open a cell here, just by drag and dropping, just insert the code as a data frame, as a Panda data frame, and automatically the code is just inserted. So it's automatically created. Also, Eric makes some changes in how he reads the data. So this is why in the next cell is where you have remove this, and in this cell is where you have the reading of the CSV file. But this is made automatically from the platform. So independently if you are working in this platform or writing your own Python script in your computer, after reading the data frame, what you have is a data frame. So if you are usually working with Python, a data frame is just an Excel file. So you have this is the head of the first lines of the data frame. So it is a data structure that is just like the CSV file. So you can work programmatically on this data. So you can, for example, plot the histogram of one of these columns to see what is the open. You can plot. You can analyze this. What is at the end of this Python script? The histogram of two different variables to plot them, just to take a look at them. And it is, I think, is what Eric wants you to do is just to make some kind of analysis to guess what are the features that are the more relevant for this objective.
Yes.
But then you can combine two different points of view. Those of you that are expert in the markets, you by sure will recognize the name of the figures, the features, and you will in advance know that perhaps this feature is very important.
Yeah.
But those of you that don't know anything about the markets, how do you can recognize these features? You should be able to do this by using correlation, scatter plots, or whatever.
Okay.
So use your.
Yes. If you think it's just a variable with values, okay, so you could treat it as you want, okay? Well, come back to Python, and what we are doing in Python is follow this template I prepared with these 4 methods, okay? First one, we'll read the data we have, okay? This is the simplest one. In the second one, we will categorize data, okay? After we will see what I'm talking about. Next one is feature selection. I think most of master students should be familiarized with this process. And finally, we will try to make our model, okay, and trying our predictor that will make us billionaires. No, I'm kidding. Okay, so let's start from the beginning. The first one is read data, and go to see them. Here it is. This is the most simple one method. Okay, what we are doing here is opening our CSV file and reading in Python. And after open and read, the next thing we are going to do is to normalize some variables, some of our features, okay? And why we are going to do this? Well, this is because there are some of these variables, some of these features that has no much sense by themselves because they are very relating with the price, okay? For example, if we are, remember the candlestick we have, one of the technical indicators we are using, okay, remember the candlestick, open, high, low, close. for example, one of these features is an exponential average, for example, of the hikes, okay? But imagine this has a value of 120. This is not the same if the close at this time is 118 or if it's 50, okay? Because it means something completely different, okay? That's the point to normalize some variables. Okay, well, that's all. Let's see. Well, I think it's very interesting to execute each method and see how is changing our file, okay? So let's start. Okay. So here I know it's not very friendly to see here, well, but it's okay. Here we have our CSV file, okay, with all our values. Okay, here it finished with the targets. And after that, what we have is this, okay? You see that we have substitute some of these, okay, we have changed some of these values dividing by the close, okay, to normalize using the close. Obviously the close is the same as before, okay? And well, there are some of them that are not normalized. For example, the RSI is an oscillator and its value changes between 0 to 100, so it's kind of normalized already, so it's not necessary. And well, that's all. That's the first method. Okay, let's go on and see what's next. Okay, second method is turn floats into categories. That means to categorize data. And what is to categorize data? Okay, imagine we have, for example, the RSI that I've mentioned. And well, actually, to categorize data is to replace these real values we have seen for natural values using some thresholds, okay? So the idea is, imagine our feature has a price that's has a value that it's moving between 0 and 100, like in RSI example, okay? We could make, for example, 4 categories. This is not 4 categories, this is 3 categories. Okay, 25, 50, 75, and 100, okay? And if the value of, if we see this feature as a probability distribution, this is between 0 and 102, maybe we have something like this, and we are replacing this for this, where we have a number of points here, number of points here, number of points here, and number of points here, okay? Got it? Okay, and well, do you think, question for you, another one, do you think that categorized data could give us more information that not categorized data? Okay, are you following me? Do you think that with this way we could have a gain of information? Okay, hands up yes and hands up no. Yes? No? Okay, the answer is no. As you could see, we are losing precision, okay? So it's impossible to have more information if we lose that precision, okay? So why we categorize data? It's the next question we should ask ourselves. Okay, the main reason is our technical reasons, okay? I didn't make the calculation as well, but I think more or less to hash data this way could provide us more or less a 10 to the 5 factor of memory saved, okay? So we are dividing the memory that we are using in more or less this factor. Like I said, I didn't make the calculation very good, but I think it's more or less like that. Okay, so, well, okay, let me write here near target, because obviously, as I said, we are losing information, so which price we are paying to save in this memory, okay? So let me write here another issue. We will come back later, okay? Okay, well, I think it's interesting to explain you the next thing, different ways to categorize data, okay? First one, very easy, like I draw, equal ranges, okay? I have a variable, a feature that it is moving between 0 and 100. I divide in equal spaces, equal ranges, and it's okay. But sometimes it could be very interesting to, okay, I think it's nice to write here. Maybe instead of choose 25 that has less data, that, for example, this other range, we could move this. For example, 35, I don't know. This smaller because we have more data here, okay? And try to make a distribution like this, okay? Okay, you follow me? And maybe this one is 35, this one could be 45 because here there are more data, more events that has this value. Here 65, for example, and here, I don't know. Okay, and well, also I think it's very interesting to play with the shape we give to the categories data, okay? We could try to make, well, and the distribution, we feel more comfortable with it, okay?
And a question from my side, what would be the other approach that would be more precise in order to do this, to compress data instead of doing this feature by feature quantization? Which will be the standard procedure for reducing the amount of data without trying to lose information? Which? You want to project your data in smaller subspace. So you can use techniques like principal component analysis and something like this. But what do you think that they are not using this? What is the price that you pay if you use principal component analysis? It's just to project your data into a smaller subspace. You are losing information, but trying to not to keep the distribution of a single variable, but the whole set of features. To project this in a subspace, what is the price? This will be better in terms of the information that you lose, but you are losing something. But perhaps it's very important in this field. What happens when you project your data? What is the meaning of the new data? You don't know which are those dimensions. You can project your data in a small subspace using projection, linear projection, principal component projection, or autoencoders with learning. But the price is that you don't know what is the meaning of these new features that you have. You can compress in order to reduce the amount of data that you have for more efficient processing, but you don't know what is the... Or you can understand that this component is made as a combination of several features. So not all the information is lost, because using principal component analysis, you can also use like a factor analysis to use extract information on what this principal component is related to this figure, original figure. So you don't really lose, but this could be another approach of instead of just discretizing or quantizing the variables to use as a projection into some spaces. But I think that now it's more important because we retain the meaning of the features.
Yeah. Yeah, it's very interesting too. Okay, well, and next issue, how many categories we should choose? Anyone could give us an idea to how to choose these categories? No? Okay, this for me. Okay. Okay. I think sometimes, like, if we are making this project with little amount of data, and it's better to choose, okay, I choose 5, 6, 7, or the categories I want. But if you want to be more accurate, we could calculate the mutual information we have about our target with, for example, 3, 4, 5, 6, 7 categories, and if we calculate the gradient of the mutual information, we will see that there's a point where to add another category is not giving us really an improvement of the mutual information we are having. Okay? Well, we are not going to do this in this project, but I think it's interesting to comment because maybe it could be useful for you. Okay. Well, like I said, for simplicity, we will choose 4 categories to make it lighter, okay? And well, where we are? Here, okay. Let's execute and see what happens. Okay. So, okay, from the beginning, we have our CSV file, like we said. After that, we have our normalized file, okay, with the values dividing by the close. And after that, we will find, well, this is the list of features we have. After that, we will find now our categorized data. Obviously, the close is not categorized because it's the primary data we have. But you could see here that now we have substituted these real values with 5, 6, or 7 digits, I don't know, for another one very much lighter to work with it. Okay, also it's writing here the thresholds that is using for each feature. Okay. Well, we have categorized our data, and let's go on to the next step.
Sorry, how many days are you processing? How many days are you processing? Days, months, years?
Okay. The file I've passed you is data since March 2010 to, I think, the same, 15 March of this year. Okay, so we have 7 years, more or less, with 1 hour precision. Okay? So how many rows we have? For curiosity, we have 40,000 rows. Okay? Okay, so go on. Our next method is features selection. Well, to make an introduction, when we make feature selection, the thing that we want to do is, imagine we have all our features here, and we have our target, okay? And the idea with feature selection is that he will give us a subset of this set, okay? Which represents the more important features we have, okay? So, well, at this point, I have a question for you, that because Luis have told me that you should know which feature is the most interesting one, and I don't know if if you are as brave to solve it.
Let them some time.
Yeah, if you need some time, the ones that didn't bring computer could put together with another one and try to solve it. Also, the people that is more expert in trading, we could say, just seeing these features we have here, okay, sorry, the name of the features should know which one is the most interesting one.
That Maria is working, and Echo is also working.
Well, you can plot the correlation matrix and see.
Yes. No one.
The second method is you can use decision tree, the algorithm from Seminario, and you can get the importance of the features. You just choose the feature with the highest importance, the highest.
Let's go a step beyond, before machine learning. The first approach, using correlation with the information. Try to do a correlation match with the data frame. Now. I'm sure that Mario already has. No? No? You have. This is not R. You can use R.
Okay, how you will do it? Okay, and trading people. Come on.
The expert.
See these features. What do you think is the most interesting? When I start this project, I already know which one was and is the most interesting one. Okay, well, I let you the answer for you. Well, I'll continue and I will explain you how we are going to calculate. Okay, for our feature selection, we will use an algorithm that's called incremental associate Markov blanket. Okay, but for simplicity, we will call it I and B. Okay, so I will write here. This will be our feature selection algorithm. Okay, and how it works? Well, the idea. Well, this is useful to have here. Okay, the idea is we have all our features and the target we want to predict, and the idea is for each target we will calculate the mutual information from communication theory between each variable and our target, okay? So our result will be like, for example, RSI 0.03 bits of mutual information. Average of 50 periods, 0.1, for example, and so on, okay? And, well, when we have finished with all our features, we will select the one that is giving us the bigger mutual information about the target, okay? And what we do next? Well, next step is very similar from the first one. We will calculate another time all the mutual information, but this time we calculate the mutual information of each target, of each feature about our target, knowing the ones that we have selected, that is in this method the authors call CMB, that means current Markov blanket. Okay? More or less? Any doubt? Okay. So we will make iterations and fill in this CMB to select our targets. Okay, and when do you think I and B stops? Okay, if we continue doing this, we will select every variables, and well, to make it stop, the authors talk about a threshold of mutual information that, I don't know, I have the paper in some place, but I don't know. So if for all variables we are not obtaining more than a threshold, I don't know, for example, 10 to the -6th, we stopped. But in this project, this is not very useful, because it occurs that when we are increasing CMB, the other features give us more information about target, because it knows CMB. Okay, so this time is more interesting to select a fixed number of variables. We will work with it and to stop when we select it. Okay, more or less. Okay, well, so, well, it also has another phase, but well, it's called shrinking phase. And when we have all our features selected, imagine we have 5 features to select. When we have our 5 features, we make the shrinking phase. That means we are trying to look for false positive. Okay, so we check that these 5 features is over. The authors use another umbral. This time it's more useful, I think, and that anyone is a false positive, but it never happens to me. Okay, so sorry. So well, let's see the code of the IMB, and here I put you a trap, but I was good and I didn't realize it. We have 2 methods of EMB, okay? And both of them works. But what's the difference between them? The first one calculates a probability distribution with all the features we have and my target, okay, and our target. And after, it selects each iteration only the ones that it is using. This is faster. The other one is calculating a probability distribution each iteration, okay? So why we are using the second one that is slower than the first one? Well, this is because first one needs a very, very big amount of RAM memory to could use it, okay? I let there because maybe one day you have access to a supercomputer and you could try with it, but the one that actually works is the second one for a regular computer, okay? So, well, We will use six features this time, okay, because we don't want to make it very long, and let's see what happens. Here it's working, okay, you see, we have our features and the mutual information is given. You could see the screen as well, or it's I don't know. No, I don't know how to make it bigger, this part. Did you know?
Are they also there?
Okay, you could make it bigger because I can see. Nice, thank you. Better now? It's okay? Okay, what's happening here? We see that we are taking, like I said, each of our features. We are calculating the mutual information, and when we have finished, we have the most important feature to make trading. That's the time, okay? This is the one that is giving us much information. I think it has magnitude orders of difference with the second one, okay? So for the traders, the most important thing is time, okay? Well, it continues. Here we have the next selected technical indicators. This is actually very interesting for the people that make trading to know mathematically which ones are the indicators that are really giving us more information, okay, or that could give us more information, okay. Okay, here we have the fourth, and finally we have our six features in our Markov Blanket. Actually, look at the day of week, day of month, time. Okay, for traders, very important. The time, the hour, the day of the week, the day of the month. That's pretty important. Okay, another question for you. If we use a fixed number of categories, you think there are another way to have more accuracy and to be sure that this is the better Markov blanket we could obtain? Okay, for me too.
What are the dangers of using feature selection?
Okay. If we will use a fixed number of features, well, this is not very efficient, but this is optimal, okay? It's the way to know that these are the features that are better. We could calculate the same, but with all possibly combination of 5 features, okay? I mean, I have 60 features, so I will have a lot of, Eduardo could help me, lot of combination of 5 features. And if we try with all of these combinations, we will obtain the one that's giving us more information. Okay, obviously this is nothing like efficient, nothing similar to efficient, but I made the proof with 3 features because more you need computing powerful. And for 3 features, the ones that IMB selected was the same as optimals. Okay, so this means that this algorithm, incremental association market blanket, it's very interesting and very useful. Okay. Okay, so now we will come back to the first thing we have right here, okay, to the target. And well, now we know how to select features and what we could do to select our target, okay. Well, the idea is pretty similar. Okay, you have my different targets, like we defined, for example, in time, and you have the CMB of each one. Okay, so for target 1, I have CMB 1, CMB 2 for target 2, and so on. Okay, and well, this is fixed. I won't change it in the project, so I can calculate my mutual information between these things and obtain a point here. Okay, so for example, we are here, this is here. Okay, so you will find the optimal point where it's easier to try to trade. Okay, more or less. And the same with the money. I have choose 0.5%, but we could make the same graph, I don't know, with, and maybe this is here, this is like this, and if we put together, we will find the optimal target that we should use. Okay? Okay. But well, again, for simplicity and to go faster, we will use the targets we defined and not do this. But I think it's interesting to keep in mind and to try something with this one day. Okay, so well, we go for the last and more important method, that's train predictor, and it's where we're going to create our model, okay? And now to see the representation of the problem, if we will have 2 features instead of 6, because 2 is possibly to visualize and 6 is not. We have no 6-dimension way of see things. So imagine here, for example, we have the time that we have said is very interesting, and here we have an average of 50 periods. What we will have is some points here, okay, and some of them are zeros. I mean, these are the points that I'm not interested in, okay, because they are telling me to stay flat in the market, and it's not important for me. And maybe I could find here the points with a 1, okay? So my target is try to find a rule that allow me to separate the ones from the zeros, okay? And I always like to show at this point this picture that I think it's pretty interesting and it's pretty nice. That's representing the same as I've drawn, but with some more quality. And after we see, you could see, okay. And after we see some algorithms, some machine learning algorithms that separate their, in this case, the blue ones from the red ones, but it's the same that as I've done. Okay, so well, I'm sure you know a lot of machine learning algorithms, but I think it's always interesting to start with the simplest one, that is the decision tree. Okay, and well, against most people thinks, well, you know what is a decision tree? I guess yes. Okay, could I pass without explaining? Okay, well, it's the simplest one, but against most people thinks it has, at least in Sklearn's library, a lot of attributes. Okay, that here is all. Okay, let me come back to presentation mode. Okay, perfect. Okay, here we have the method as we found in Sklearn's documentation and page. Well, I didn't say, but I recommend you too much to work with Sklearn's library and to read the documentation and the files they have, because it's very, very interesting, okay? And well, this is all the attributes this decision tree has. Well, as you know, decision tree try to separate a subset using rules, okay? And the first one attribute is how it try to know where to split, okay? And here we have two ways predefined. First one is entropy, okay, another communication theory method. And second one is Gini, that's information gain. Okay, it's kind of gradient of the entropy too. Okay, after that we'll find a lot of attributes that allow us to stop the tree, okay, because if we don't stop the tree, it continues to making division, and maybe it's dividing one case from one case. That has no sense because we are working with a big amount of that, okay? Last one I think is interesting is this one. This is not a method specific from a decision tree, okay? And this means about, this cares about when we have an unbalanced set, unbalanced set, okay? I mean, if we have 99% of zeros and 1% of ones, maybe our tree could say everything is a zero and it will have a 99% of accuracy. That's great. So this is used to balance the sets, multiplying or dividing by the probability of each event, okay? But if we have kind of balanced set, I think it's not necessary to do it, okay? Well, we have seen the decision tree, and well, let's execute. I think, yes, it's the decision tree, okay? IMB working. Okay, see that each iteration is slower than the other one. you see that now is printing slower than in the first round. This is because make probabilities distribution is hard to the computer, so try to make all together like in the first I and B method that I passed you is crazy. Okay, and also see that here stops a moment before finish feature selection method. This is because he's checking that we have no false positive, like I said, okay? Well, and this is our result, okay? In the set we have trained, we have a 78% of accuracy, and in the set where we validate, we have a more or less 73%. What do you think? You think it's good result, or it's not very good? It's very bad? Okay, opinions. Now you can be mistaken. What do you think? Come on. Yes.
I don't know. I mean, for example, in image recognition, it would be a disaster. But here in this context, I don't know if this is good or not.
Okay. Good answer. he doesn't want to to take the risk. Okay. More opinions? No? Okay. Well, I think in this field, this accuracy is crazy. It's great. It's awesome. But if we see the scattering matrix, we could see that it's not as interesting as this result could appear, okay? Because we are just trying to, we are just predicting 100 once, okay? So it's not very interesting, but I will show you the result we have, because, well, I choose this decision tree to make it simple and to can visualize, okay? Well, I think if you work in Linux, this, okay, give me a moment. This is automatic and you don't need this program. But here we go. Okay, see what this decision tree is telling us, okay? First thing, obviously, is the time. Like I said, is the more important factor in trading. And okay, what we are looking for is any box that it represents, well, this is in Spanish, I'm sorry, that the price is rising, okay, that you have a majority of ones instead of majority of zeros, okay? So, well, to see it very fast, I've programmed these boxes until we arrive to a majority ones box, okay? And well, I'll show you in TradeStation for the people more used to trading. I think it's very interesting. I don't know if I have, yes. Okay, well, this is the code that if anyone is used to work in TradeStation, it's ridiculous. It takes 8 lines, and I think you can compress more. Okay, so what do you think? Well, for you that are less familiar with trading, this is a back test, okay? And what we are representing here is the equity results if I've made the system that I program, okay? So if I would follow these rules during 7 years, I will obtain this equity curve, okay? And what do you think?
You will be rich.
Well, you win $90,000, okay? It's not very bad. Well, actually, it's not very good. It's not something that anyone is crazy to trade in the financial market, but if you see this code that are nothing like a real system code, it's pretty good result, okay? But if we go more in the past and we see more years, we will see that it's not very good idea, and we will yes, okay, but see the possibilities that with a few amount of data that we are not being very accurate, and with just 3 lines we have this, that, okay, again, it's nothing to make a party, but it's, well, it's more or less is enough, okay? Okay, well, my idea now is...
So before that, the lesson learned is, well, at least, I don't know if you have some questions, because you know that random tree is a very simple classifier. This is not very powerful. In fact, it's very poor to classify a random tree.
Decision tree.
A decision tree. But it is easy to interpret. You can just see tree,
that's...
you know what's going on, so it's very easy to understand what is.
Yeah, I think that's the main advantage that decision tree has. Okay, this is something that I can read, and something that I can program, something that I can understand. Okay, that's something.
But you must also realize that when a program when training decision tree is the number of leaves, because it's very prone to overfitting. Because you use a very large number of decisions, you can overfit your data. But in the training that Eric has shown us, there are some out-of-the-loop data for validation.
Yes.
And it seems that there is no overfit. Not too much, because 78 versus 72%.
What kind of clustering algorithm you have used?
This one is the first one we have used, is decision tree. We start from...
What kind of
clustering algorithm has several versions, 3.5
Genie
or 4.5.
or entropy?
No, we are using Genie. Okay, you are right. I didn't explain. We are using this. The one that I've executed is this one, okay? I am only, well, if you, by default, if you don't see nothing in criterion, you are using Genie, that's gain information, like I said. And the only thing I've defined, I could delete this and the result will be the same, because this is predefined too. The only thing that I'm saying to the tree is that the max leaf nodes it could have is 10, okay? This is one, yes, this is one way to stop, because like Luis said, if you let the tree grow and grow, you will overfitting for sure. Well, like...
what is the recommended dip for leaf nodes?
Well, it's a good question.
Yes.
It depends, but the best way is just to check for overfitting. Usually you grow a big tree and then you start to cut. Yes.
For validation, you use three blocks of data?
This is the problem, because in terms of validation, it seems that there is no overfitting, not too much overfitting.
Not too much.
But
when you
try to use it,
yes, you see that there's over.
So why it is a disaster? There is no overfitting.
Okay. Yes.
Maybe the smallest number of leaves is better.
Yes. Well, there are sometimes that another step, another leaf node, it could separate better the subset. Okay, there's a...
You add just a new leaf and just obtain a 0.1 increase in accuracy. This is not good, because you are going to overfit.
Also, I used to work work too
But why
with
it works? Why does it doesn't work?
mean with fraction lift. This is very useful to, or mean sample split, to not create branches that only has one event, okay? For example, that has no sense, and that's overfitting, sure, okay? Well, and the next idea I have.
I want them to ask the question because I think it's important that you know you have trained an algorithm and the accuracy could be good or bad, but with 70% is
crazy.
Great. But then Eric says that if you apply this simple rule into the trading stations, then then why this nonsense? You have an algorithm, you have training, no overfitting, and you apply it, and you get broke. So what's wrong? Why? It's nonsense. The algorithm is good. So why? The past of the data is different. Well, this is a problem that we have been going around and around throughout the time because data has been trained in a certain period of time.
Yeah, actually 60% of all our sample.
So we are assuming that data collected from today will be the same in the next year. So this is false, and in particular in this area is very important because the behavior of these random variables are changing continuously. So this is what is hard. You are not able to train an algorithm today, working with today, that will work tomorrow because perhaps the behavior tomorrow is different.
Yeah.
So definitely you need something that adapts, that changes. This is what I learned from Eduardo.
Yes, yes.
So you can train some algorithm for 1 year, and the algorithm is great, but you put it into work, perhaps now it doesn't work. So this is what is very hard in this area.
Yeah, well, everyone that makes trading knows that market's changing, and
because in image processing you have an image of a cat, and it's always a cat. No? The cat is not changing to a different size or a different shape. But in this case, everything is changing. That is why it's very hard to become rich. You know?
okay.
And another important point, it's very basic, but I think it's important to. It's just in the confusion matrix. I don't know if all of you is very basic, but you know that there is a big problem there because you have one class that is perfectly classified because there is an unbalanced data. There is more data of one class than the other. So, as Eric remarked, this is very important because if you train a classifier that has more examples of one class, then the classifier should learn always to decide that well, the results are good, but unless you are interested in this, which is not the case.
Yeah. Well, this is specific from each problem. Okay, maybe if we were working with cancer, the thing that we don't want is to see a big number here. Okay. Well, I guess you understand scattering matrix.
But it depends on how it is plotted. It's just the first row is what is the true and what is the predicted value.
Oh, yeah.
No?
Okay, I got.
The true.
Okay, the good ones are these ones.
Yes, the diagonal, but what is the true? True and the recognized values can be sometimes.
Okay, this is ones.
So the number of.
Okay, this is zeros, and this is ones.
Okay, that's in vertical.
Yes. Yeah, okay, I didn't understand you. Okay, so for example, if we were working with cancer, the thing that we don't want to see is here. It's people we say they don't have cancer, and after it has cancer, okay? But now we are working in financial market. The zeros, I don't mind the zeros because it's telling me to not operate, so it's not important for me. I care about the ones, okay? These two values, and in the way of this, the next thing I would like to do with you is try to think a ratio, because we've seen that the accuracy is not completely enough to define how good is our model, and try to discuss how we could create a ratio that evaluates our model. Okay, so we are working in trading. Remember the things we had.
Interesting make a conclusion, Martin, for testing one branch that you suspect that is failing in the prediction.
Could you repeat?
This is something you are going to talk
One
about.
branch in the three.
Yeah, you are going to talk about random forest now.
No, decision. No, I continue with decision tree.
A way of testing is just to randomly change one branch and then to see the results. It's very sensitive to this branch, so the variables there are very important. The Gini important ratio is more or less related to this.
I look at a very large list of indicators with several parameters. This kind of work method is prone to have overfitting. It's better to use a small list in the options for the decision tree.
Yeah, we have made a feature selection and we are only using 6 of these features.
In fact, that was what Echo proposed. There are 2 different types of, well, 3, but we are now seeing 2. We're going in random forest, we will see the third one. When making feature selection, one is filtering, what is presented today. Just before applying any machine learning algorithm, I do feature select. So it's independent of the machine learning algorithm. This is one approach. And then after that, you use an algorithm. But perhaps this mutual information criteria is not appropriate for a particular machine learning algorithm. So another approach is just to use all the features in a given machine learning algorithm and let the algorithm to choose what are the relevant.
Even this decision tree method has...
Random forest is particularly special for this. It's very used in genetics because there are a large number of genes. It's very popular in that area because you can train it with very large number of. It makes a random selection of features, and as the output, the own algorithm gives you information of what features are relevant. It's not a pre-filter; it's just the algorithm. But this again is dependent on this algorithm. So every method has problems.
Okay. Well, my idea for now is try to make together a new ratio to evaluate how good is our results. Okay, so give me ideas.
To improve it.
To evaluate. Okay, we will make, and you will make now some models. You will try changing these attributes, and I want a method to know which one is better, which one of you or us are obtaining the better model. Okay, ideas?
You didn't use temporary dynamic information. You just choose the feature selected by that algorithm, but you didn't use the information along time.
Sorry.
You mean in terms of feature selection even?
Yeah, I mean, you didn't use the temporary dynamic information along time, right? I mean, they should use some kind of more complicated algorithm like recurrent network. You can use the information from the previous time, and now you only use every feature is just from that specific time, and when you train the algorithm like decision tree, you only use that feature from that specific time.
Yeah, I think this is the problem, that you fix a time window, and then you use the data in that window for training, and you don't model dynamics.
Yes.
What you
And what's the highest, is this the highest accuracy you get in the simulation?
Well, if you predict all of them like 0, maybe you have more accuracy. So, like I said, the accuracy is not the main problem now. because our problem is try to raise this number and to decrease this one. Okay, so that's the thing. Well, I don't have any kind of ratio thought I want to make together, but for example, one idea that I think is more complex that it looks, it's to subtract the, okay, this is our scattering matrix, is subtract this one to this one, because this way we are representing this, we are giving information to the accuracy with ones that are the points we will operate, okay, because like I said, we don't go to operate a zero. If our program says zero, we don't do anything, okay? So we are focused on the ones. And this way, for example, subtracting, we are giving importance to the number of correct trades we have and the percentage of accuracy. Because if we make as a coefficient, as a fraction, we are not giving enough importance to how big is this number. Okay, more or less. This is something quite different from. Yeah, well, the idea was to make. Okay, Eduardo, help me. How do you define this?
Maybe A minus B is
Maybe, well, if we want to give more importance to the ratio of accuracy, we could multiply or something like this. That's my idea. Or we could give more information to the point we want. Okay, but the idea is try to have good percentage. I mean, a bigger than B and a big. Okay, that's the idea that I think is kind of difficult to communicate, that I want to tell you. And like I said, maybe in another project, like for example cancer, like for example another thing, we are not interested in this one, and we are interested in, okay, I'm trying to giving you some tools or some ideas to evaluate your models in function of the target you have. Okay, so well, for example, we are going to use this ratio, okay, A minus B, and okay, now I'll give you some time. We have seen decision tree. We know the parameters, the attributes, so you could try, and let's see who obtains the better ratio. Yeah, I have the one that I've used only with only one parameter, but here is the method that scalars give to us. You could change whatever you want and try to obtain a bigger ratio. Okay, I give you something.
Don't forget you must take into account the risk-reward ratio.
Yeah.
Okay.
Well, of course, but I don't.
If you predict correctly a lot of trades, small trades, but you fail big trades, and with two big trades you can broke.
Yeah, of course, but okay.
How could be this taken into account? You need to have information on the cost, the final cost.
Yeah, well, what I did in my TFG is to estimate how much it cost me to fail an operation etc. But well, I think this is pretty hard to explain. But well, you could make the ratio as complicated as you want and probably as better as you want. Okay, and maybe it would be interesting to compare these results with the results you are obtaining in TradeStation or in your trading platform, and see how it's related, this accuracy, with the accuracy of your trades and your win-loss ratio.
One method for keep out in the formula the ratio is the use the base system with the profit target and stop loss separated with the same distance.
Yeah, that's the way we are doing. Yeah, we are predicting a fix. So if we are seeing like trading system, we have profit target, okay? And if you see here, stop loss, no, but we could put the same one.
Yes.
And it's pretty far to the price, okay? So I think this enough stop.
I think another thing you should take into account when making this ratio is that you have enough trades over that period of time. So I don't know for how long have you trained that algorithm, but if you make like trades in 20 years, it's...
Yeah, completely true. If you need, as in each thing that you made in trading, you need statistic relevance, because if you had the better system but you have 25 trades, maybe you don't have the better system, like he said. It's completely true. And this case is in the limit. It has 140 operations in 7 years. It's in the limit. How do you think, Roberto? Enough, more or less enough. It's not too much, eh? You are right.
So what you want is just someone improve the trick.
Yeah, I want someone to give me a better result than this one. I'm only use max leaf nodes equals 10, and I would like you to try to improve it. You could use the thing you want. You could change my code as you want.
The class weight is a matrix, is an array of 2 values.
It's known right now.
But could be changes using an array, 2 values or 2 places. Could it change it?
Yeah. You could change everything you want. And okay, I don't know what you will find. I want to see.
Because if you increase the number of nodes, you will get overfitting.
Maybe yes, maybe not. Let's try. Okay, I'll try to.
Let's try.
This is power for the model. What do you think is going to happen now? Okay.
80%, 85%, and 60%.
This trap.
And the other approach is to change the markup blanket.
You could use. Okay. Well, I didn't expect it, this result.
79.
This is only using 1,000 of leaf nodes. You like to see what crazy tree is this one?
But it doesn't overfit.
No, it's strange. I didn't expect it. Okay. I think it counts. Okay, here. This is like a sequoia. No, I'm just kidding. No. Well, obviously this is not. This can't do anything, and we probably overfitting if we made a tree like this. Okay. And well, also another thing you could try is come back here. Why don't try and categorize data? Okay. For example, we know our Markov blanket, and we could use. Okay. I have. Give me one time. It's interesting. Even maybe.
You have first a minimum number of items in
Yes.
list?
Yes.
What is the okay.
Oh, mean sample leaf. We have a lot of ways to stop it. Okay. Well, anyone has. Okay, my result now is negative, so I think I will not win in the ratio contest. Okay, anyone has a positive ratio?
I have done.
Well, I use real values instead of categorized values, but after I'll tell you. But okay, is there anyone that has a positive ratio? Okay, this is your scattering matrix, BA. Someone that has this one, like in the first three, you will get positive value or not? And the rest of you?
I didn't get to run the code. I don't know if the GitHub code is correct, but I didn't get to run.
It doesn't run?
Yes.
You-
It's after.
Maybe you should change the path of the file. I don't know.
It was first time I changed also. Yes.
Okay, it's the same code I sent. I'm sorry.
If you check your GitHub, there is one return CMO, and that CMO variable doesn't exist in the code. So I think there is something different from GitHub to your code.
Wow. And you are not registering this platform? I don't know. I passed this code. It worked for me.
We tried
Okay. If you want, I could send the code in an email, or if you want. Well,
another one?
yeah. I have ready another one algorithm.
And what is also interesting is that the percentage of this, well, in this case, that you have moved too much, the 59% and 54%, it's because you are using very strange number, but in a particular range of interesting values, the percentages are always 77, 78, but the interesting column changes.
Yes.
That's what you said.
Yes.
You must focus on.
Yes. Well, actually, before start with random forest, that I guess most of you know, I think it's more interesting to come back here. Okay. This is the other point we have separated. Well, the idea is, okay, I told you that when we categorize, we are losing precision. So let's see what happens if instead of categorize, I pass the real values. Okay, what I'm going to do is, instead of calculate my Markov blanket and put with categories, I'm telling what is the Markov blanket. This is easier to do like this, and start. And the tree is not equals as the last one because this is balanced, but this is the way to obtain this strange column that Luis said. And I think it's pretty interesting to see that even we are losing precision, but for our model we can obtain more accuracy with less information. Okay, so I think it's interesting and it's something very, very important. Okay, because not always more information means more accuracy. It depends of our model. Okay. And well, my next idea was to explain a little bit random forest, but I was talking with some of you and I think they know perfectly how to use it. So I don't know. Well, I tell very fast. A random forest is an algorithm that divides the set of data. Okay, we have all our set of data, and it divides in different parts and apply a tree on each part. Okay, and when it receives a new event, a new point of data, it uses all the trees and see what's the majority vote. Okay, that's the way it decides if it's a 1 or if it's a 0. And well, its parameters are similar as the decision tree ones. The new one parameter is this one. That means the number of division or the number of trees we will use. Okay. And well, my idea at this point is to let you more time and to try with the algorithms that you want. Even you could come to scikit-learn page, but I repeat, please spend little time here because it's very interesting and use whatever you want. And okay, the idea was to increase the ratio. And okay, like Luis said, the one that obtained the bigger ratio, it will have 1 extra point in his final mark. So, no, I'm kidding. And well, that's my idea. I don't know if you want to stay time trying, But, well, I think it's time to make the conclusion. You could try at home, it's very late. And, well, I think the conclusion is if we think in how many possibilities we don't use, how many data we are not using, how many algorithms we could try, it's that there are a big way to to walk, and it's very interesting, and we could obtain something very interesting, I think. And well, that's all for my part. I don't know if you want to.
You have some questions or final comments? You see that this is an area where you can have a lot of data.
Yes, yes. This is one of the advantages of working trading. The data is, like you said, I think there are not too much fields where you can obtain the data in rows, but it's quite simple. And also you could try with more machine power, and maybe instead of use 60 minutes bar, use 30-second bar. Why not? If you have a very powerful computer, instead of 7 years, during 20 years, for example, and maybe you could try, instead of only crude oil, with 10 futures and 12 temporal intervals. So I think it's possible to increase this accuracy and to obtain the extra point from this.
So the problems are that one problem is that you cannot have scientific references, because this kind of algorithms are not generally published. Because if you find a good algorithm, the last thing that you want to do is to publish it.
Well, I think, I don't publish my algorithms, that's true. But I think if I told in public one algorithm that I'm using and I am operating in real and I'm winning money, even the people we don't operate, that's my theory. And I don't know how to, I found very, very good algorithms trading system in internet, and it's free, and you take it, you try it, oh, this works, you know.
Is there a reference algorithm in that field? An algorithm that is the best one?
No.
Common algorithm.
And no, and I think the idea is to mix. Okay, in trading, the idea is to mix a lot of trading system with low correlation and try to obtain a portfolio that is better. This is because when you use two different algorithms, well, this is not good to explain. If you
It's another topic that you have covered. Boosting, you can just combine different algorithms, always in most of the
because you are adding the money you are winning. Okay, if I have two systems, one win 10 and the other one win 10, I'm winning 20. Okay, that's clear. But the risk, that is the bigger drawdown, that means the bigger goes down of my equity, it is not aided. So it's interesting to diversify. And well, also something that could be interesting is seeing an algorithm that works, a trading system that works, and try to obtain it using Python. You know what I mean? Okay, make the opposite way. I know this is an algorithm that works, and I made it using these 3 features, and I want Python to give me again my algorithm, how I can do it. This way maybe you could obtain another model. Maybe you should edit the current algorithms in sklearns. That's pretty hard, but I think this is one of the way to could obtain a very big ratio.
And this is also, now that you are studying with Santiago, reinforcement learning, is another area for that, because you are in an environment or you are taking decisions and you're getting rewards. So, and there's a dynamic, highly dynamic system. So we have had some talks, and they are now in a course with Santiago on reinforcement learning. But it's an area that fits very much in this. So you have opportunities to improve. So it's too late, and so you have to comment something to Eric. You know where he is.
Well, even I will write here my email, and if anyone wants to.
Or you can contact us and we will attack Eric.
Okay. This is my email, and if anyone wants to write me or.
Eric Martin. So thank you.
Thank you.